Hi, good day, everyone. My name is Kara Rieben, and I'm delighted to be moderating this session today. I'm joined by an intelligent group of panelists, and perhaps you can each wave as I introduce you so the audience knows who you are. We have Amy Young, Global Digital Advisor at Microsoft. Amy is based in New York City and works with some of the largest financial services companies on their digital strategies. Next, we have Daniel Weckend, Head of Partnerships within the Capital and Financial Solutions Group at Shopify. Shopify is certainly making bold moves in this space, headquartered in Ottawa, but Daniel joins us from the other side of Canada today in British Columbia. And finally, we have Hassan Reda, Group Lead Product for Nexus, the banking as a service solution at Standard Chartered Bank. Hassan also leads Mox Bank, which is the challenger virtual bank venture by Standard Chartered. And he joins us today from Singapore. So we've got pretty great coverage across multiple time zones, bringing together some of the smartest minds in the industry to talk about embedded finance and specifically how partnerships play a role in driving value. So let's start with, what trends are we seeing in embedded finance that you find most interesting? What's really driving the move toward embedded finance? Of course, you're seeing this in your organizations as participants and creators. What do you find most compelling and most interesting? And I'll invite any of our panelists to jump in and share.
I'll take a stab at it.
Sure, Amy.
Thank you. Pleasure to be here. So I was listening to this new series of podcasts this weekend by Michael Lewis, and it's called Against the Rules, and it's about coaching. And his thesis is that, we are, part of the evolution of humanity and self-actualization is around, it relates to coaching, this persistent desire to improve our performance. You have coaches in the acting field. You have coaches, obviously, in the business field. It started in the sports field. And that really resonated with me from the perspective of financial coaching, the notion of personal financial management tools and how they are democratizing coaching, if you will. And for me, that's when I look at evolution of embedded finance, it started with just trying to remove friction from experiences. Take Uber, obviously, as the classical example. But I think what's really is that as industries are looking at the entire value chain and trying to figure out how they put together ecosystems, they're gathering data that's enabling be that coach to the customer. They're seeing this the most advanced case with what Square and Shopify are doing. But that's what's exciting for me watching the evolution.
Yeah, I would just add to that, the democratization of access is a massive theme. Obviously at Shopify, we're here for our merchants, and the products and features and services that we're launching are launched in a way to enable them to either scale, grow, or even start a business. And that access and traditional barriers to critical financial tooling that business owners need to scale a business has been extremely challenging. So while I think the term embedded finance is fairly new and a hot topic, there's platforms like Shopify that have been doing this and doing it as a response to our merchants for many years. So for us, this lives in the way that we're serving up lending. So our Shopify Capital product is tailored off of data, and we're removing any bias towards lending and really looking at critical data that we have on our platform to make really informed decisions. And then it's scaling across access to business bank accounts with Shopify Balance and card issuance to really create that tooling and create that, business behaviors. So serving up those insights that merchants need when they're early stage to be able to write make the right informed decision for their business.
Yeah, one thing we've definitely seen in Asia is really regulators are really waking up to the concept that we need the banks, we need the financial sector to innovate. So Hong Kong all of a sudden decided to issue 8 digital banking licenses, and everybody really jumped on it. And that really led to a spurge in hiring of fintech talent, digital talent into banks, and really forced people to innovate and remove that friction into an underserved and underbanked type of population. And we're seeing that trend in Malaysia, that's already picking up licenses in the Philippines. Vietnam, it's talking about it. And every other day, we're seeing a new type of journey being launched by the Indonesian tech giants that have a huge population to target, that are all financially savvy, that are all onto mobile. And that's kind of creating that need to really partner up with the best of the best globally and really start to talk to the regulators about eKYC, how do we mitigate certain risk, and really start to share best practices from different markets to really say, this is how you uplift your standards, this is how we looked at digital fraud, and this is how we've solved that type of problem without adding any strain to the end customer.
Great, yeah, and that's interesting and kind of carries into our next theme of, international markets. How do you think about going global and the varying regulatory requirements, the opportunities as well as the risks? Hassan, I know that, a Standard Chartered, right? Nexus signed on its first partner with a large e-com platform in Indonesia. Why Indonesia? Why pilot there? What was the strategy behind that? And then maybe from there, Daniel and Amy, you can speak to, kind of the global expansion that you're seeing and experiencing and some of your thoughts around that.
Yeah, so I think Indonesia is a pretty exciting market. I think the old strategy, how we're transitioning from an old business model to a new business model is that way. So essentially, the way we used to make money or the bank used to grow was to open a branch in a village or in a city, wait for it for 12 to 18 months to materialize so that you can break even. Or the other way was really around, let's launch a co-branded credit card. I think at this day and age, this is kind of becoming a bit redundant. And what we've tried to identify within Nexus is there's a lot of very exciting partners that have that ecosystem that want to complete that ecosystem with a banking partner. So there's 2 ways to go about it. Either you apply for a banking license, have to hire a lot of people to do the compliance, risk, learn that business, and put up some capital reserve with the central bank. Or you can really partner with an established bank with a license, with an established team, with a core banking product, with all the rails already built in, and really deliver that added value to the end customer. And our first partner is Bukalapak, and they have 100 million users that they're catering for on a day-to-day basis. They're all digitally active, mobile savvy. And the opportunity for us is really around how can we target and how can we serve an unbanked population. And that's kind of the interesting part to say. Part of Standard Chartered is how can you be here for good? And part of it is really how can we serve simple banking product to an unbanked population and give them really financial access and address financial inclusion. And I think with Indonesia, with that big base, it's really around how we're kind of next step for us to gain market share and deliver a good experience to these type of customers. And we've signed our second partner in Indonesia, which is Sociala, and that kind of brings a very different aspect and a very different target market for us to work with.
Yeah, maybe to add on there, when we're thinking about expansion, geo expansion, Shopify is in 170 plus countries. We have merchants who are wanting to create and chomping at the bit to create businesses that are direct to consumer and retail. It represents a really unique challenge when you're looking at scaling globally. Local kind of regulatory oversight varies by country. We have a really strong precedent at creating a very partner-centric ecosystem. So when I think of embedded financial services and solutions, I think this is just another surface area where there's really strong opportunity and potential to partner regionally. So you are serving up those very nuanced solutions that a business owner in Southeast Asia would have that very differ from those in Western Europe, for example?
Yeah, I guess what I would add, Hassan mentioned a regulatory change in his part of the world, and I think that's not something to be underestimated. This is one of those domains where regulation has the opportunity to actually be a catalyst for innovation. PSD2 obviously being the quintessential example of that. Forcing banks to open themselves up. And it's interesting to compare the UK, for example, which had a relatively narrow scope, in terms of deposit accounts and certain types of institutions, versus Australia, which is taking more of an open data approach, engaging beyond banks in how they're structuring, open data as opposed to open finance or open banking narrowly. And of course, Biden has now signaled that this is going to be a policy priority for his administration as well. So I think how the regulation is structured shapes, in particular, how incumbents behave, right? You have entrepreneurs obviously all around the world doing, the most innovative things, but how the incumbents react, I think, is really key to getting these things to go mainstream, to really touch everybody. And
certainly, yeah. There's definitely that dynamic of, working with the regulators and, of course, having to be in compliance for that, new market that you're entering, and making sure that still it's a frictionless experience for consumers that, Amy, you mentioned earlier, right? What frictions still exist within embedded finance, and how do we solve for this for consumers? And, is there a partnership play? Is there a strategy where you can reduce friction by making sure that you have the right partners lined up to help you launch a product to succeed?
I can speak about my experience in Hong Kong at Mox Bank. So essentially, Hong Kong is an overbanked population. Everybody has at least 2 to 3 credit cards. The problem was not financial inclusion, but the problem for us to solve was how can you deliver a differentiated experience to customers that they can notice. I'll tell you for a fact, as a bank staff, it took me around 2 to 3 weeks to get my credit card. At Mox, what we wanted to do is, how can I remove friction from even before you step into a branch to open an account, which is I don't need to go to a branch, I don't need to wait on a branch, and I can get my account instantly. And that's kind of the ethos which we try to deliver on. And I won't take my example, but I remember my wife was the first external customer for Mox. And I got her to onboard or open an account at 8 a.m. in the morning. She hated me for it because her hair was all over the place, and she had to do live KYC with the camera, and I had to promise that nobody was watching. But at the end of the day, within 4 minutes, she had an account, she had her digital card, and then she was able to add her digital card to Apple Pay. Versus our experience in other banks, which we had to go to a branch, wait in line, submit a passport, submit an ID, wait, pray, whether they'll open an account or not. And that whole process took 2 hours. And at the end of it, she was very surprised to say, well, is that it? Do I actually have an account? And whenever it's too good to believe of an experience, that's when we kind of know that, yes, we're onto something, and it's an experience that people enjoy. And I think account opening is really just the first step of removing friction. And because that's kind of the main barrier to getting access to a financial product, but it's about doing it every single day with every single journey.
Yeah, absolutely.
Well,
Go ahead, Daniel. Huge plus one on removing friction on that account opening experience. What I would add there is, when we're thinking of business owners or those that are accessing these financial solutions, to run any business requires a number of platforms. And what we see at Shopify and what we're hearing from our merchants is they want one seamless experience. The super apps that you've mentioned previously, the pinnacle experience there. You're logged in once and you're being served up solutions as you need them and as they are relevant. So I would say that friction and removing the barrier up front and then stepping business owners naturally into the financial products that fit when they need them, and really catering and tailoring for that experience and providing that experience on a single platform. So removing the requirement to go to various vendors or service providers. Why not serve up a single platform or a single admin that kind of serves as the gateway or portal into all of those bundled products?
So I couldn't agree more with what Daniel and Hassan have said, but I think I'd be a little more aggressive about it, actually. So obviously we need to reduce or eliminate friction, make it easy to sign up for accounts. But I think what is exciting about this space is actually it's not about banking. It's about what I need to achieve, the jobs I need to do, jobs to be done, and frankly, what ancillary benefit I get from the end-to-end experience. One of the Ron Shevlin, a well-known financial commentator, he's described embedded finance as the merging of the operational lens with the financial lens. And this gets to my point about coaching earlier, but Bill Gates said 25 years ago, people don't need banks, or they need banking. And actually, they don't even need, it's not about banking. They don't want to pay, they want to shop, right? They don't want to buy a mortgage, they want to buy a home. And, we need to think much bigger about what are the unmet needs of the consumer way beyond a transaction. And I think that's what's exciting about this space. And when since you were asking, your question was actually about partnerships. This is where partnerships become absolutely essential to every financial institution's strategy. Because if you want to try and get access to that operational lens, whether it's on my business or on my life, you don't have access to that data. Shouldn't talk about my competitors, but Googleplex, the partnership or the platform that they're building in partnership with a handful of North American banks. I mean, that's a really interesting way of bringing together the lens on the consumer's life, that operational lens that they have to enhance the financial services experience.
Excellent. Yeah, and you bring up a good point there, and I think Daniel mentioned it as well earlier, around the data that this is creating, right? How do data and commerce intersect in this new age of retail? And how do you recommend fintechs and merchants really take advantage of it? What are some of the opportunities there? Any thoughts on that?
I think data is king, and what we're seeing is data consumers, business owners have a high appetite to share data if it makes their life easier. They want to provide their data to the right relevant player, and that's it, full stop. So partnerships plays a huge role there in bringing in very, if we want to use the term headless, players in this space that are able to kind of aggregate data, provide and decision on the right factors at the right moment for merchants that power platforms like Shopify, who have the relationship with the merchant to be able to provide a very tailored experience. But I think the path that we're headed for certainly is one in which there's a strong partnership between three players: a regulated party, a platform, or a commerce player like Shopify, for example, and our merchant, who's ultimately making the choice on where and when they want to provide their data.
Yeah, one thing that we've been looking at with our partner is how do we use data to remove some of the friction in some of our journeys. So if we look at the lending product, usually quite a bit of lending product requires a proof of residence or a proof of address or a proof of income. So what we're looking at is that these users have been shopping on these platforms and getting items delivered to their home for the past X number of years. So how can we tease up some of these data points to say, well, I know you've been getting these deliveries successfully for the past X number of years. So as a bank, why can't we just leverage that data with the right consent to just remove certain barriers for you to give us a proof of address or a proof of income, so that we can make you one step closer to you getting that loan or that buy now pay later or any facility for that matter, and reduce that type of drop off, so that we're not privileging any customers other than others if you don't have the document right next to you.
So clearly, yes, data is what powers all of these experiences, and I guess that's where vendors like Microsoft and other cloud providers come into the picture, because most incumbents don't have the infrastructure in place to be able to easily share data, with appropriate controls between different parties in an ecosystem. And so that's really whereas Google is trying to leverage more of its proprietary data, Microsoft's angle in this space is really to enable ecosystems amongst others. So make sure all of the parties to an ecosystem have the infrastructure in place to do whatever they might want to do. So it's not about the data that we have, it's about enabling our customers across industries to leverage, to bring together the data they have to make 1 + 1 equal more than 2.
Great, yeah, excellent thoughts. Thanks for sharing, Dan. I love that you brought up the term that we're hearing more and more these days of headless commerce, right? That decoupling of that customer-facing front end and the technical back end, and going headless provides that agility necessary to keep pace with some of these emerging e-commerce technologies. What roles do we see in commercial partnerships in terms of how they play in these embedded finance experiences? Are partnerships between companies an integral part of the experience? How do your organizations look at that, and what's the strategy on partnerships?
Yes, certainly from the Shopify perspective, we're very fortunate to have a number of rich partner ecosystems that solve very real jobs that our merchants need to have successful businesses. I see massive opportunities for kind of collaboration and speed to market over any competition, specifically in embedded finance. So for us, when we're looking at our roadmaps and how we plan with partners, it's definitely speed to market and finding partners that are providing. At Shopify, for example, we've chosen to go on a number of our products with Stripe, very API-centric platform approach, and that really makes a lot of sense for us. We have fast speed to market that we can capitalize on. Our teams are highly efficient in building in that way. So that's really where we're looking to find the right regional partners who are also building platforms that give us that speed to market and that ease of integration to launch fast products.
Yeah, I completely second that point. I think a lot of times we're moving from looking at partners which are purely from a client acquisition and CVP standpoint, but it also transcends to the whole value chain. Our cloud provider is an integral partner. Our identity and verification partner is a partner, is not a vendor. Every single piece of that puzzle that's creating that modular, interconnected banking as a service platform is a key partner as part of delivering that value to the end customer. And these are the key strategic pillars for us to expand and to different markets within Southeast Asia, Africa, and really the Middle East. And there's quite a bit of interested parties in what we're looking to offer as part of building that end user value and providing that distinguished CVPs for their customers.
So again, I would advocate for expanding the lens even further than my fellow panelists have suggested in their comments. I heard about this startup several years ago in Africa that was using mobile phone records to advance credit. So, that there are a lot of entities that are doing that kind of thing, but bringing together data sources from other industries to provide, to transform people's lives, I think is the way we have to look at this. So this particular startup they gave this example of a seamstress who was spending an hour to 3 days a week walking to the market to buy fabric that she could then produce into value-added goods, because she didn't have enough capital to buy a week's worth of fabric. So she's spending a huge amount of her productive hours schlepping back and forth because of a need for microfinance. And by analyzing her mobile phone records, of course, you can get tremendous insights into the stability of her business, the diversification of her customers. Does she only work at the end of the month when she needs to save for rent, or does she have consistent rhythms to what she does? Obviously paying her mobile phone bills with regularity. I mean, these kinds of things, if you apply that to other aspects of people's lives, I think that's where this starts to get really, really interesting. And it always puzzles me that we have it in the United States and in Europe anyway, we see very little partnership between phone companies and financial institutions. T-Mobile has done something interesting relatively recently. But given that the original embedded finance thing was M-Pesa in Africa like 25 years ago, bringing together telco and financial services, it amazes me that we haven't seen more of this in the quote developed world. So that's what I think about when I think about where this goes and the impact of data and partnerships in particular.
Certainly, yeah, and there's definitely all sorts of different flavors when it comes to embedded finance and use cases across the world. We're really, and I like how Hassan put it earlier, it's not a vendor-client relationship. It's, they look at it in terms of a partnership. I think that's where the magic happens. That's where the success comes from. We can truly partner with another company, collaborate, and build something together. And I think that's one of the most exciting things in this day and age. So is there room for a new business model?
Sorry,
Go ahead, Amy.
I could elaborate on what you just said. So of course, as I agree with Hassan about these are not vendor relationships, they're partners. But part of that it implies, I think, often those words are just used to signify, an important vendor relationship. We do that at Microsoft even. But I think what really takes something from being a vendor to a partner is a shift in how value is shared between those two stakeholders, right? There is a sharing of risk. There's a sharing of upside, those kinds of things. And I think we need to be more explicit about the criteria of a partner versus a vendor. A partner isn't just a close vendor or an important vendor. It's something that changes the distribution of value between those stakeholders.
Yep, certainly. And I think, as you even mentioned, telcos and financial services companies and retail, you have multiple sectors, and being able to see assets in each one of them and how they play together, where can we leverage what you've built and what you've collected and created to launch something new and to create value. And so that's really exciting. So is there room for a new business model that helps all players in the ecosystem win? And I'll throw that out there to anyone who wants to answer that in terms of creating these new business models where everyone in the ecosystem wins.
Yeah, I would add probably to kind of the sentiment that Amy has shared, that really platforms are here to help customers or merchants get those jobs done and get them done with the least amount of friction possible. So the opportunity really exists to solve for more jobs, remove kind of the requirement to onboard into numerous solutions or numerous products. So the ability, I think, to razzle dazzle here, what the last 18 months of this kind of pandemic has shown the world is that there is a ton of opportunity to create efficiencies. There's also limited patience both on the business side and the consumer side. So anything where we are removing friction creating a more level playing field. I think one of the kind of things that gets us out of bed at Shopify every day is that we're merchant obsessed and we're here wanting to build for our kind of 1.7 million entrepreneurs who are all trying to hustle and create a business. So for us, really identifying where those merchants need to see efficiencies in order to be able to focus more fully on growing their business is where we spend our time. And pretty often the proof is in the data. So identifying points of friction, seeing where kind of merchants are struggling in accessing financial products, the ability to provide kind of unbiased lending is a massive driver. So servicing working capital at the right time so that like we're entering into prime time for every retailer globally to get ready for kind of Black Friday, Cyber Monday. Now is the time to be ordering that inventory. So if you understand that there is a seamstress who needs to buy more fabric so that they have more shirts or dresses to sell at that season, being able to make those informed decisions and almost educate your users that these are the right steps that they should be taking. I think that's the big opportunity is financial literacy, financial insights, and serving that up in a way that's very digestible and easy to access.
Certainly, and I think Shopify does a terrific job of this in terms of the partnership ecosystem you've created, where you have these embedded finance solutions and you're coming to market with financial services, and you have kind of these default partners, but then also, it's up to the merchant. If they want to select a different partner or provider, you have this whole ecosystem with integrations that you're growing every day and really engage with partners that really helps the merchant grow their business and tackle, any issues they have along the way with their growth. So great example there.
At Mox, I think we were lucky enough to have two key shareholders that invested in Mox alongside Standard Chartered Bank, which were Hong Kong Telecom, which plays out to Amy's previous point around why are banks and telecoms not coming together. But I think we've partnered with Hong Kong Telecom, PCCW, which is the entity in Hong Kong that really manages all of your bills to the different entities, and most interestingly, Ctrip, which a lot of us know it as Trip.com. So we kind of brought that whole ecosystem around banking or the ability to process certain payments, get a credit card, get a debit card, with the ability to really simplify the way you pay your bills, book a trip, and really get great offers alongside of it, and really creating that really good ecosystem. And what we've seen is people really responded pretty positively about it to say, well, you're not really like a bank. You're giving us great offers and really you're rewarding us instantly about it. And that really created a kind of a shift. And that was really a plan of attack in Hong Kong. Because in Hong Kong, Standard Chartered is one of the top 3 banks or top 4 banks. The top one is really HSBC. And for us, we saw that as an opportunity to really gain market share. And HSBC's response was a bit timid, like, let's open a new proposition, a new segment, and let's invest a bit in the wallet app that they had. It might have a certain level of success, but they definitely lost quite a bit of market share. And for us, that's kind of worth it in terms of how do you get to that level? How do you attack in a different way? How do you provide value in a different way to attract people that really want the product that you're offering that might not have been attracted to it before because of various barriers to entry? And kind of the same thing is what we're doing with Nexus in Indonesia and hopefully in other markets around. You've known us as a brand this way, but we're able to offer so much more with our partners, with Bukalapak, with Sociola, so on and so forth, that really would add value to complete their ecosystem.
Excellent. Yeah,
So
I think we just have a few minutes. Oh, go ahead, Amy.
So your question was about, to what extent can these ecosystems, have a place for everybody? I can't remember your exact words, but I think what we're likely to see is almost these partnerships amplifying the trend that we're already seeing of winner take all kinds of markets. So, in days past, you could aim for like the top 5 players in an industry had a business, right? And that number has been shrinking. How many players can survive in an industry? And so when I think about Shopify, for example, and its partnership with Stripe, to what extent, because Stripe became that partner and not another payments platform, Shopify, because it has such a compelling presence with its online merchants, it becomes sort of a kingmaker of the partners that it chooses to include in its ecosystem. And so I think that has the potential to amplify some of these winner-take-all kinds of dynamics. The market is defined differently. It's not that Stripe then becomes the only provider of payments broadly, but if it becomes the primary enabler of a specific product in the Shopify ecosystem, which is so powerful, there isn't room for another partner like that. And Daniel, feel free to correct me if I've misrepresented how it works with Shopify, but that's my thought.
Yeah, I mean, I think when we look at foundational products, we have now launched a buy now, pay later solution exclusively with Affirm for our US merchants. We've seen tremendous success with that partnership. Our merchants that are leveraging buy now, pay later at checkout, seamlessly integrated, it's auto-enabled when a merchant turns on payments with Shopify, are seeing in early access a 50% lift on ticket size at checkout. So there is a strong demand to go with a best-in-breed partner when it makes sense. And then I think there's also the ability, and this has been touched on, I think, Kara, you called this out, to while you have maybe a preferred solution or preferred path where you really are flexing all of the data and all of the collective insights that you have to make the best informed decision for the businesses on your platform, there is going to be no kind of one size fits all. So really having access to strong ecosystems that live around some of those foundational products, I think that's really been the key to success for Shopify. There's massive kind of internet retailer 100 brands on Shopify now, as an example. Some of those brands bring their own payment service provider to the table when they decide to platform on Shopify. And Shopify is in an amazing position where we have existing integrations to hundreds of payment acquirers and payment gateways worldwide, because we fully know that there's going to be merchants who need other solutions that Shopify doesn't add or doesn't have today. But that's certainly our North Star to get to that point where we believe we can offer the best solution for every merchant worldwide. But that's going to take us a couple of years.
Excellent. I like that. That's bold. Final question. We just have a few minutes left. Where does embedded finance go from here? What strategic bets are you making in the next 1, 5, 10 years as you're seeing what's taking shape?
So I would say that given what I've offered about expanding the lens, that this is about solving jobs to be done and broader needs of customers, whether they're consumers or businesses. I think it just goes bigger and more diverse. And Microsoft's mission is aligned with that in empowering every person and company on the planet to achieve more, and we want to enable the embedded finance ambitions of all of the participants in those ecosystems.
Yeah, I think what we're seeing is that every other day or every other week, we're seeing a new digital bank open up that serves a certain need. I think while it's nice to have for the next year or two, there's quite a bit of valuation play that's happening at the moment. I think what we expect is in the next few years that there's going to be definitely some consolidation. What's going to be very good for the long run is a sound business model. You don't need to grow hockey stick just to grow valuation, because we've seen certain digital banks either being called out for a going concern or actually closing shop, and we're seeing or getting acquired by the incumbent banks. And we're seeing that trend starting from Australia. And I would really expect that to happen across different markets. Like, I don't expect the UK needing 20 digital banks, right? So we expect kind of that type of trend happening. With that said, I think that's where banking as a service platform that we're trying to build really addresses that, because we're really trying to keep the cost down, really trying to pass that value all the way to the customer, not to service our costs by just keeping our costs down, but providing that benefit that Nexus has to the end user to make their ecosystem, their transactions, for them to go about their lives with the least fees possible and get the most out of it. So it's really around making sure that having a sound business model is really key for continuity, because nobody really wants to close shop after a year or two after just hitting a certain level of valuation.
Yeah, and maybe just to echo on that, removing the constraints of kind of banking as a service geographically. So for commerce platforms like Shopify, where you have to service merchants in 170 plus countries, removing those barriers or creating more of a borderless experience for banking as a service is really where I see kind of the next 1 to 3 years, more players in that space who are creating those efficiencies on scale.
Yeah,
incredible. Great. Well, thank you all to our panelists for this insightful discussion. Daniel, Amy, Hassan, really appreciate you sharing your thoughts and expertise with us today. And have a great rest of the conference, everyone.
Thank you.
Thank you.